Morning, everybody, and thank you very much for registering for this webinar that we're running here from HOSPA today. It's 10 o'clock, it's Wednesday the 6th of May, and we're currently in lockdown here in the UK. My name is Jane Pendlebury. I am the CEO of HOSPA, and for those of you that don't know, we are the Hospitality Professionals Association based in the UK. I'm joined today by 6 of the HOSPA board members who specialise in the finance aspect of hospitality. So the plan is very much for them to talk through what they do, their experiences of this COVID-19 crisis so far, and then to answer questions from all of the attendees. Some have already sent them in advance, for which we're very grateful. There is an opportunity to ask questions at the bottom of your screen as well, so please send those in to me. Thank you all very much for joining us. I hope you find the next hour of interest. On the screen, you should see the names of the directors. We're going to start with Bob Silk, who is Relationship Director for Barclays Bank. Welcome, Bob.
Thanks, Jane, and good morning, everybody. As Jane said, my name's Bob Silk. I'm a Relationship Director with Barclays Hospitality and Leisure Team. And for those of you who aren't quite clear what that means, I'll translate. It basically means that I'm a bank manager, and for the past 22 years, I've been a member of a specialist hospitality and leisure team where my customers are, without exception, multi-site hotel, restaurant and pub operators, predominantly in the UK. Overall, I've worked for Barclays for 40 years, and I think it would be safe to say that, like everyone on this webinar, I ain't never seen anything like this before. It's really quite astonishing. If you had said to me at the 1st of March, Bob, at the end of this month, all your customers will have ceased trading, I think I would have laughed at you with some justification, but nonetheless, there we are. I spend my days clearly working from home. My office is in Canary Wharf, but I guess there are very few people in Canary Wharf at this point in time. And I spend my days arranging for my customers covenant holidays, capital holidays, and further funding in order to see them through as best we can through this initial phase of COVID. And we are doing our darndest to support our customers to the very best of our ability. I think next online is David. David, you're next.
Yes, Bob, I'm here. Thank you very much indeed. I'm David Bridge, and I'm the chair of the HOSPA Asset Management Community. I'm not directly employed at the moment, but I have some relevant experience, I think, basically. During my 30 years in the hotel industry, I've had some significant challenges. I suppose, first of all, when I was working for Blandy Brothers in buying country house hotels, we hit the early 90s recession and we started managing hotels in receivership. Unfortunately, one of the groups of hotels banked with BCCI. So at one moment, everything was going fine, and then suddenly crash, no cash. All the bank accounts disappeared overnight. I suppose my second relevant experience was during the Swedish banking rescue. I actually worked for Securum Hotels. And Securum was set up by the Swedish government, and the bad loans were transferred from Nordbanken and some Agota Bank into Securum, and it was our job to actually take control of the loans, basically secure the assets, improve and sell. So that was a very, very neat job. It was the best thing about that was we had very, very clear objectives. And of course, out of that, Pandox arose with Anders Nissen. Then next, I had a little bit of experience with BI claims. I think it was in 2000 that Prague flooded, and the Hilton Hotel, which I was looking after at the time on behalf of Deutsche Bank, was right on the side of the river. It flooded, and then Hilton did a brilliant job bringing it back into action, but then we had long negotiations on the business interruption insurance, which I led, which was very exciting. And then fourthly, I suppose when I was looking after a hotel in Biarritz, 2007 was a fantastic year. we're just getting ready to sell the hotel, and then we had the subprime mortgage crisis. So all of a sudden, I was kind of delayed till 2013. I think we actually completed that sale in 2014. So those are my experiences of disasters almost. But I've never, ever, as Bob said, I've never experienced anything like a pandemic, and that just changes everything. My main interest at the moment is in kind of forecasting, getting systems together to look at forecasts, looking at revenue over all the market segments, looking at profitability by segment, looking at profitability by activity. But forget all that now. I mean, the problem is that everything now depends on government action, partial sector geographical easing of lockdown, social distancing. We really have to rethink everything in the hotel industry, and we have to look. We keep on talking about smoothing the curve, and we're going to have to smooth the demand curve as well. We're going to have to make sure that we can accommodate those guests we have. We have to look at other opportunities. I'm sure the hotel rooms will get back, but the things that actually drive the occupancy might not be present. All the activities I heard the other day about Manchester relying on shopping, on football, on things going on at the arenas. So we've got a very challenging time, but the only way we'll get through it is by working firstly as a team within the hotel, supporting each other, supporting staff, and then working with our own local communities, because that's where the green shoots will start to arise. Okay, David, I think it's over to you now. Thank you very much.
Okay, thank you. It's David Nicholson. I'm the chair of the Finance Committee of HOSPA, and I've been involved with HOSPA and previously Baha for over 20 years, and also worked for the Jumeirah Group for over 20 years, where we have five hotels in Europe, 3 in London, 1 in Frankfurt, and 1 in Mallorca. As everyone has said, we've dealt with different crises, but never something of this level. So it has been a challenge, and I'm not only focusing on finance, but also making sure the assets are safe, making sure that we don't have any frauds that could happen at this time, and also constantly keeping different stakeholders informed. E.g., it's not only the hotel, but also if there's pension trustees, making sure the insurance company are informed, and also working very closely with my auditors that we don't miss anything that the government is offering. Yep. So that's my day-to-day, really, working from home and keeping the relevant stakeholders informed and continuously updating plans. Okay, over to you, Mark.
We've got Mark Edwards here on Stuart Collins. Stuart Collins is our board member, but he's actually tied up elsewhere. So Mark, he's one of his partners at BDO. So Mark, are you there?
I am indeed. Thank you, Jane. Good morning, everybody. It's a pleasure to be talking to you this morning. As Jane says, in place of Stuart, so I'm not a board member, but he has responsibility in our own firm for managing this COVID-19 pandemic and our response. So he is unfortunately unable to join. So for my role, I am an audit partner at BDO, coming up 18 years and working in hospitality for all of that time, primarily hotels, restaurants and bars. And as everyone said, this is quite unusual circumstances that we find ourselves in. So BDO has been advising clients across the piece, and I thought I'd just set out a few thoughts in terms of short-term objectives, medium-term and then longer-term. So short-term, our immediate focus was assisting clients with things like access to loans and to grants that were on offer, obviously the job retention scheme, some work being done to look at why Tronc hasn't been included and whether it should be included, and of course the longer term ramifications of an argument to include it. Also assisting clients with time to pay arrangements, VAT deferrals and so on. So short term, all about cash management and the immediate reaction. In the medium term, advising clients on supply chain and contracts, either renegotiating or looking at how contracts might look going forward, and the terms of those contracts, and of course looking at employment contracts, both legal obligations and what a go forward plan might look like. As I'm sure lots of people are aware, there are some slightly scary statements now being made about the number of people who are on furlough but who are effectively redundant without yet knowing it. And obviously the plan that the government sets forward, hopefully over the next few days, about what an ease of lockdown might look like will be very significant for our industry in terms of how many jobs can be retained and what that go forward position looks like. Then my day job, if you like, is the accounting considerations and then audit. In terms of accounting considerations, some questions have already come through, which I might be able to tackle now, but key things we're talking to clients about are things like how do you account for the furlough scheme, the job retention scheme, and I guess for all of these queries, I should caveat that there are niche points that come up in these things. So for example, the furlough scheme you would think is straightforward. It is a government grant, and government grants have very specific accounting standards under both UK GAAP and IFRS reporting. But the treatment that you can adopt may differ between IFRS, International Accounting Standards, and then UK GAAP. So ordinarily, under IFRS, a government grant for P&L reporting, you are allowed to net off the grant against the relevant expense. From a balance sheet point of view, you need to gross up all payments. Under UK GAAP, and that includes FRS 101, which is the UK GAAP mirror of IFRS standards. So FRS 101 is a UK GAAP standard that has a different accounting treatment which requires a grossing up. So in other words, a furlough credit will be counted as other income, but not revenue, other income category, and the expense, payroll expense, will be included as a normal employment cost. All the other disclosures you need to give around salary costs and wages costs, they would include all payments to employees, whether on furlough or not. And when calculating average employee numbers, that would include those on furlough. We've also got some questions around loan accounting. And here I'm going to say that there are specific circumstances to different types of loans and grants. And so thought needs to be given to each individual piece. But in most cases, they will follow a similar application, i.e. you make a loan position, whoever picked up the tab for that loan and the corresponding elements of it would be accounted gross, but that can be situation specific, so you'd need to dig into that. I'm happy to talk through any situation individually. The other piece we're getting lots of queries on are exceptional items. What counts as exceptional at these times, apart from everything? And again, careful consideration needs to be thought through there, in particular for covenant testing and what it might mean for covenant tests. Clearly, as Bob has said, a lot of the banks are trying to be as supportive as possible to their clients, and that's great to see, but covenants still need to be discussed and worked through, and so consideration does need to be given to what might count as exceptional costs, or indeed whether there's a presentation which can be looked at for looking at this whole shutdown period as an exceptional period. I want to point out here that there is a fairly important piece around the time of a year end. So the coronavirus pandemic was declared after the December cutoff. So it's been acknowledged as a global pandemic after December. So the regulators in the UK and across Europe have agreed, and the largest accounting firms have agreed to this as well, which is that for a December year end, unless you have significant operations in China and specifically near the epicenter of the pandemic, then the coronavirus would count as a non-adjusting post-balance sheet event. So that means that valuations at December would not take into account this change in situation that we have post-balance sheet. So what does that mean? Well, clearly, it means that the forecasts that were going to be relied on for a value are going to look quite different from your actuals, and so there are likely to be significant additional disclosures required to note the potential impact going forward. If you're in the unfortunate position of having a year end after December, and so the pandemic is caught, and that may be January, February, depending on where your operations are and how they work, then the valuation, if you're holding at valuation, you are likely to find that there are fairly significant caveats from the valuers, and that may have an impact then on audits and your accounting consequences. Other accounting considerations such as recoverability of debts from corporates or other customers also need to follow those similar rules in terms of the period end that you have and how you can account for those. In terms of audit and audit consequence, if you're yet to have your audit, I would advise you to allow lots of time, first of all, because remote auditing does tend to be less efficient, but also because the going concern and forecast reviews are taking a lot of time. And I think all firms are very wary about concluding too early. I would certainly suggest that we wait for the government to give some further advice on what the easing of lockdown might look like and the impacts that we see in Europe, who are just a few weeks ahead of us. So if you can at all possibly avoid signing in the very near future, I think that would be a good idea. Just moving to longer term and some of the work that we're doing with our clients. So we have the reaction period, the building resilience and business survival, but then hopefully we can start to turn to recovery and realizing value and the kind of best of a bad situation. It's important not to lose hope altogether, of course, because the industry is a resilient one. And I guess what really needs to happen now is the thinking through as to what might happen over the next couple of years. Clearly, the aviation industry will be important in terms of leisure and business international travel. So what does your business look like? How is it going to come back from this? And that may involve a rethink about how your operations work and how the finances for that might work. And so there is a big piece of work working with clients on how they can formulate plans for the go forward position. So lots of information there, and I'm very happy to take questions from people once everyone else has spoken. For any other information, www.bdo.co.uk, COVID-19 hub, or do please get in touch, and happy to pick up with you. I will pass over to Chris.
Thank you, Mark. That was a lot of food for thought in that, and I'm sure we'll get back to you on a lot of other questions as we go through. My background, I'm currently chair of HOSPA, which is an honorary position. Jane has the main full-time role. My other day job is I'm part-time or portfolio director for a number of clients, which keeps me reasonably busy at this time, as we say. My history is that I was finance director of a quoted PLC hotel group, mainly country house hotels, and also we started up with Ken McCulloch, the Malmaison group, in the 90s. Subsequently, I've been involved as finance director of a private equity funded restaurant and pub group, and also startups of City of London based takeaway group, and also hotel company which specialized in portable hotels in shipping containers. So quite a wide range of background, startups as well as PLCs. Where we stand today is obviously a bit scary in some ways, but I think we should try and take eyes off the short term at some stage and look for the medium and long term and see how trading patterns are going to change. In hotels, that's more likely to be less overseas tourism, but can we benefit from local tourism? Restaurants, obviously we're going to have a less capacity for seated restaurants, if any at all, in the short term. And pubs and bars, I think the future there is totally unknown at this stage, unless you can get into local takeaways and deliveries, but that's really only enough to keep you ticking over. So there we are, and I think one of the key buzzwords I heard the other day is the future is likely to be local. It's not. We're not going to be global again for a while. Handing over to Diana.
Thanks, Chris. I'm Diana Mountain. I have been involved with BAHA and HOSPA since, frighteningly enough, since the mid-90s. And thinking about that, during that time we've had recessions, and we have a different attitude from banks this time round. I'm hoping, Bob, please listen, that there seems to be more capital available, and they are not so much interested in becoming hotel managers themselves. And I think they would rather support their clients through this and make sure that we can all survive the recession. I've worked in various hotels and restaurant groups, and over the years I've done practical things. I'm currently working with a couple of overseas owners. One's with a hotel development. The hotel was due to open next month. That's slightly delayed, shall we say. And then the other one is actually looking for opportunities. So suddenly the prices seem to be more competitive. The practical issues that I look after, glorified bookkeeping really, I would say I'm absolutely delighted with how quickly HMRC got their act together with the furlough scheme and how easy it was to file the first reclaim. And true to their word, the payment arrived in the bank 7 days later. I'm also delighted with the things that haven't happened, with the changes with the construction industry scheme and the IR35 proposals, which were going to come to smaller businesses. The fact that those have been delayed has certainly helped. We just didn't know what was coming, really. I think, for me, the questions would be around, Mark touched on this earlier, if we keep employees in businesses, presumably we continue to report the number of employees on the financial statements. The holiday pay is still accruing during furlough, other benefits, presumably. When it comes to letting people go, in inverted commas, will those costs have risen even higher because people have been on the furlough scheme? And what do we actually do about it? So it's an interesting time. I'm also going through a couple of audits, and the going concern statement is unusual, shall we say, with future completely unknown. And I think I don't envy the auditors at the moment. It can't be an easy job. And also the other issue that seems to be rearing its head is business interruption, as David mentioned earlier. The key clauses are suddenly coming under scrutiny. If you're not covered for restricted access, then it's going to be very hard to claim against your business interruption policy. And I'm interested to see the group actions that are going ahead with the help of UK hospitality, the nighttime industry. Let's see what happens for other parts of our sector, but we just want to make sure that we can get up and running again. So thank you, that's all from me. Back to Jane.
Thank you very much, Diana, and everybody. So you will see we've got a vast amount of experience here on the board, crossing the whole of hospitality, and everyone today specifically focused on finance. You are able to key in questions. You should be able to see that hopefully on your screen at your end. If you have got any questions specifically for any of the panelists, then please just send those over and we'll do our best to address as many of those as we can. I'd like to pick up on a couple of those points. The insurance one is a very interesting one. Everybody that I have been speaking to recently has been really struggling to claim on any insurance, even if they are covered for disease, even one that was insured against pandemics, but because COVID-19 wasn't a registered pandemic, it didn't count. David Nicholson, from an operator in a hotel group, have you had any luck with claiming on any insurance? Have you even tried?
Yes, I've been in contact with our insurance company pretty much on a weekly basis, getting an update. At the moment, at the start, it looked like there could be no claims going through, but he did say there could be light at the end of the tunnel, but we haven't claimed anything. We haven't got any claims successful yet. I've also been discussing with them how we can look after the building, as I mentioned earlier, because crime prevention for empty properties is key for us, because now will be a time where opportunists, people might see hotels and restaurants as targets for their stock, you know, or that once they get inside the building, they might not leave. We could have squatters, for example. So it's not only business interruption claims, I'm also concerned about property claims, making sure that the building is looked after from an engineering point of view and that it's still solid. But it's worth keeping in contact with your insurance broker.
Great, good advice there. Thanks very much. Another one that I'm asked a lot about is the trunks. Now, I think it was Mark who touched on trunks, in that they're not included, and a lot of people in our industry do rely on that as part of their key income. Are there any comments on that, or is everyone just assuming that we just have to wait and rely on, as Diana mentioned, UK Hospitality, who are doing an amazing job of lobbying government on behalf of the whole hospitality industry? Has anybody got anything to add on trunks at all?
Well, perhaps can I just set up just for clarity, because I think one of the things that is interesting here is that the people use trunk or tips or service charging quite that they kind of use them interchangeably, but they are quite specific. And I think for clarity, what has been made clear by HMRC is that a claim cannot be made for a payment which is non-contractual. So if a customer comes along, leaves a tip, and that is put into a trunk or is distributed by the company, because it isn't contractually an obligation on the entity to pay that out, it is not included in the JRS. So it's quite specific as an issue. Clearly, if you have, if you aren't using a trunk, or you're calling it trunk, but actually you're paying NI and you are actually saying to individual employees that they will get X amount of top-up pay, and that is a contractual position, then you would be able to include it. So it's quite a specific piece. I think the challenge that UK Hospitality has had, I think, is probably that for many years it has been beneficial for the hotel industry and the restaurant industry in particular to argue that trunk is absolutely not an issue for the company. The company is purely acting as an agent, and so the tax benefit from operating a trunk does quite rightly belong to the company and employees. So there is a challenge here, I think, that if it were to be included, if that argument were to be successful at some point, HMRC would turn around and say, okay, we're going to look at this again, and very worst case, put NI on both the payments for the employee and the employer, but also make it VATable. So I think there is a challenge in terms of the argument that could have a significant downside going forward.
Great, thank you, Mark. I'm just looking at some questions that are coming in. We've got more of a statement here from Steve Waldron, who says he's looking at a significant increase in budgeted cleaning costs going forward with COVID materials and regime for reopening, and also reduced conference capabilities. So there's a grim outlook there from Steve. We do have a webinar again this time next week, where I know one of the topics is going to be on cleaning specifically, because that's going to be one of, I think, the criteria for people choosing hotels, for guests choosing which hotel they stay at. So we're going to go on to more of the cleaning aspect in next week's webinar as well. A question here from Russell Kett, who many of you will know. Does anyone have an estimate of the additional costs which will be required for hotels to undergo before reopening in terms of preparing a hotel for guests, which obviously includes cleaning and hygiene, as mentioned, and how much the ongoing cost of this will be? Now, that's obviously a tricky question to answer because every hotel is different. But from a budget perspective, I guess everyone's increasing their budget for these kinds of provisions needed to be made. Has anyone got any thoughts on that? I should ask someone directly, shouldn't I? David Bridge, I know that you've been involved in some of these new cleaning directives that are being put together. Would you suggest that a hotel increases their budget specifically for cleaning materials and those sorts of things as well?
Oh, absolutely. I suppose the problem is it's not only the cleaning material, it's also the staff, because all the processes around the cleaning will be involved with staff. So the night cleaning contract might be much more significant because they've got to rub down all the surfaces, etc. You've got to do things in the lifts, in the public areas. I'm not sure anyone's quantified it. I mean, everyone's come up with their new initiatives. You've got Accor, you've got Hilton, you've got Marriott. but I'm not aware that anyone has actually priced that up as yet. But as I say, it's also the staffing behind that. It's also putting in screens, I suppose, in the reception areas. You know, we've been opening up all those areas for the last 20 years, and now we're all closing them down again. And you know, the impact on social distancing in the restaurants, how we can actually feed people through there. We're going to have to look at flexibility of the staff. There are just so many aspects. As quite a few people have said, the whole industry is going to change and our approach is going to change. So it's a matter of sitting down together, working out what we're going to do, what we need to spend, the CapEx, the OpEx as well, in order to face this. But at the moment, it's a little bit too early because we don't really know what's going to happen after the lockdown, how we're actually going to ease the lockdown, what we're going to be able to serve. I mean, I feel very sorry for hotels because they're not working on very strong margins, and this is really going to affect them. And of course, if you suddenly have everyone opening at the same time, the other issue, of course, is everyone's going to be looking for these cleaning supplies. And I have a slight fear that the independents might come off worse because all the chains have actually been there and done deals with the main suppliers, and I wonder what's going to be left. So supply and demand is anything to go by. It could be a challenging time, and obviously let's not talk about room pricing either. So difficult times.
Great, thanks for that insight there, David. Another question here from Adam Parker, very specifically about some grants that he has received, over £500,000 worth in hospitality grants, which were all received during April. And his question is, can some of those be deferred into the next financial year? I guess that's one probably for Mark or Diana.
Well, shall I go first, and Diana might be able to correct me if I go wrong. I think the answer to that is going to be it depends. That's a classic auditor's get out there. It's going to depend what the grant's been given for, and over what period is appropriate to recognise. In lots of cases where it is for immediate cash support, it is more likely than not that it gets recognised at the point of receipt. But if it is for a longer term support position, then you may be able to spread it over a longer period. But it is going to depend on the specific circumstances of the grant.
Okay, Diana, have you got anything to add on that?
I would agree with Mark, but I think on all of these issues, it's going to come down to disclosure and discussions with auditors, advisors, and how perhaps the bank might interpret this, especially if you consider covenant tests, reporting, other issues at stake. Maybe I could bounce that back to Bob. How much are you going to be looking at audited accounts and notes about the reaction to this crisis?
So this also leads us into a discussion about covenants, doesn't it? Where an age-old adage comes to mind, which is cash is king. And so you are going to find that lenders generally, along with their customers, inevitably are far more focused and exercised by liquidity and cash than by, for example's sake, the accounting treatment of items such as that we're now discussing. And in relation to covenants, what you typically finding, and my experience has been thus far, is that lenders are pretty accommodating in reacting to requests for covenant waivers or even covenant suspension. Lenders have a tendency not simply to waive or suspend without any kind of controls on their position as a lender. Rather, the favoured position tends to be a minimum liquidity test. So with all of my customers, I've asked them to do what is arguably the impossible, which is to put together some sort of forecast for the remainder of this year and perhaps into the first quarter of next year, so that we can gauge the amount of liquidity that a business is likely to have, and therefore set some sort of minimum liquidity test. But in a world where, at the best of times, forecasting a business's performance is as much, or if not more, art than science. Now, of course, it's incredibly difficult to do, because the one thing we all know with absolute certainty is how much cash we're burning each month. So we've taken all the mitigating actions that we can possibly take in order to reduce cash break even, and therefore reduce the cash burn. So we know what that's going to be, but what we have zero visibility over is precisely when the lockdown for hospitality will come to an end, albeit it seems from messaging from government that will be later rather than sooner. And then we have no idea how long it will take to get to cash break even, and no idea about how long it will take to start to generate surplus cash sufficient to meet, for example, say, borrowing commitments. So I'm very conscious whenever I ask my customers to undertake that exercise, although they have all kindly done so to the best of their ability, using a variety of assumptions on the eventual ramp up of revenue. I'm very conscious that just what a difficult task it is. But coming back to the first part of the question, I'm more interested in liquidity than the minutiae of what's in the auditor's accounts, to be perfectly frank.
Brilliant, that's reassuring, Bob. Thank you. Another question here from Altaf Khan, who asks if there are likely to be any subsidies and tax credits for hotels as we have to improve technologies and introduce sanitation regime. Tough one to answer. I guess we have to wait for government on that. But has anybody got any input into any subsidies or tax credits?
What I would say is, if you are looking at doing things in a different way, which lots of people will be, then definitely talk to your tax advisor about R&D credits and see if there's an opportunity for a claim there. I think the government is trying to help where possible, and so it may be that is an avenue that is well worth exploring.
Great, thank you. And Rob Maloney here, who's listening in today, and another of our board members, has picked up on Bob's point about the end of the lockdown for hotels. And he wonders if the eventual phasing of hotel openings will depend on their size and location. There's been a lot of debate about this. My personal feeling is that the country house hotels will be better placed than the city centre hotels. But in conversations with one of our sponsors yesterday, he said to me that one of his hotel customers is doing the exact opposite and focusing on the city centres rather than the country hotels. David, with your different hotel, David Nicholson, with your different hotel types in London alone, let alone across your region, are you anticipating opening them differently, or are you purely waiting on government recommendations and advice?
We're looking at all different scenarios, but we are also waiting on the government advice. But we do recognise we'll have to open them differently. Maybe have phased check-in, check-outs. We'll have to look at a whole range of things, from cleaning, signage, queuing guides, like we already have in the supermarket. But we are waiting on the advice. Yeah. But food and beverage, I think, will be the big hit for the hotels of how we handle that in the future. Whether it's room service, whether the buffets are gone now for breakfast. So that's one that's up for a lot of debate as well. Yeah.
Absolutely. And another
Bob here.
Jane, you mentioned country house hotels. I heard a comment the other day that some of the communities around the country house hotels aren't terribly keen that they reopen, and then attract a lot of guests from COVID-19 ridden places like London and some of the cities. We all know now, we get the statistics each day of the areas that are worst affected by this awful pandemic. So I think that might have a little bit of an impact as well.
Yes, I've heard the same, that local communities are not so keen on opening up the country house hotels. The more remote they are, the less keen they are to have visitors.
Devon, Cornwall, some of Wales, etc. I think it is going to be quite challenging.
Exactly, and Scotland as well. That. Bob,
Yeah.
you need to add something in on that.
Yeah, so a personal view, without any particularly great insight, I suspect that limited service budget hotels will find it, in relative terms, easier to reopen and recommence trading than full service hotels with lots of F&B and leisure and so on and so forth, because they're predominantly a rooms business, and therefore I guess that kind of lends itself to social distancing, albeit I picked up earlier this week, someone was telling me that there's an idea that if you sell a bedroom, then you won't be allowed to service the bedroom until 24 hours have elapsed after the guest has left. So you're effectively selling 2 nights but getting paid for 1. So that will inevitably depress occupancy. What hoteliers do in order to counteract that, in their striving to get to cash break even, maybe that has an inflating effect upon average room rate. I don't know. In the meantime, I have an interesting document that I picked up last week, and Jane, you may have a copy, but I'll gladly circulate this so you can send it to the wider audience. A document called The New Normal, which is focused on food and beverage. It's focused on pub and restaurants, but clearly it has a read across to hotels. It's, at first blush, it's quite a weighty tome. It's 33 pages, but there's lots of nice photographs and interesting graphics, albeit there was nothing to colour in, so I didn't have any use for my Crayolas, unfortunately. But it has some very useful thoughts and insights about, just purely from the F&B side of our industry, how long it may take to get back to whatever we might consider to be normal trading, and also some insights into what the future may look like in terms of how you apply the rules of social distancing and so on and so forth. So I'm happy to recirculate that if you'd like me to.
Bob, who published that?
It came into me via a hotel consultant that I know, and it was written by some management consultant who I've never heard of. So I've got to be honest, I don't vouch for the quality. Yeah, I don't vouch for the quality, but nonetheless, it is a very good and interesting read.
Great.
Another one, which is probably slightly more easy to read, is JLL Food Service published something the other day, which I thought was very, very useful. I can send you a link for that, Jane.
Yeah, that's excellent.
Lovely, thank you both very much. That's great. A comment here from.
I suppose the opportunity for hotels is they can actually sell more lunches going forward. I mean, I'm not sure what's going to happen to the snack bars in city centres where you go out and buy a sandwich, you join a queue of 40 people, and you've got 6 people behind the counter all crushed in together. I can't imagine they're going to open anytime soon, so people are going to be looking for lunches in other places. So maybe we have to have lunches open between 11 and 3 or something. I mean, I would think we're going to have to kill the rush hour and try and phase when people work. So maybe there will be more opportunities, but it'll be over a lot longer period. So that might be an opportunity for us.
Well, it's going to be interesting to see how the office market picks up and whether more and more people will work part-time from home, and that might just really affect city centres anyway.
Yeah.
I think the hotels are notorious for their entrepreneurship, so where they will pick up on all these opportunities for serving extra lunches or food and beverage throughout the day, and also on the cleaning issue, reducing cleaning to only on departure, which I think will keep both the room attendants and the guests potentially much happier as well, without having people going in and out of their room during the day. But I did hear Sally Beck from the Royal Lancaster say a couple of weeks ago when I was talking or listening to her speak, she was saying that they were doing exactly that, leaving rooms empty in the run up to the shutdown because their occupancy was so low, and they were able to do that. So that was just what they implemented at that stage. And they probably can do that again when they reopen. But as time goes on, you don't want to be leaving your rooms empty if you can possibly help it, which is where cleaning comes in. She also quoted a rate of cleaning a room in a care home once. I guess the guest there passes on in different ways, but once a guest passes on from a care home room, the cleaning cost for that room is in the hundreds of pounds, which clearly a hotel couldn't afford to do that for each time a room checks out. Right, going back to any.
You've also got to consider maybe if you look at the Emirates video, they're actually changing the aircon filters after each flight. You know, do we have to do something there? There are just so many ramifications.
Absolutely, yes. Got another comment here on cash, picking up on Bob saying cash is king, that they're being even more damaged or hurt on their cash flow, not just because of their regular expenses, but also on the refunds that they're having to give. I'm not sure we can particularly give any advice on that. I know a lot of people are offering credit notes or vouchers for use at future times and trying to encourage people to come back, but I guess that's down to your individual terms and conditions of reservations. David, have you been?
Could I comment on that?
Yeah, of course, David.
I had a holiday booked in Morocco, and I booked with 2 hotels, and I was flying with Ryanair. The 2 hotels, they refunded my deposit, or my prepaid. Actually, it was a fixed rate booking. And I will certainly go there again. I'll make every effort to go to those hotels and visit them and spend the money. I will make every effort to avoid Ryanair. That's all I'll say.
Yes, I've heard that comment as well from the hotel's perspective, from the staff, those who have furloughed their staff but are keeping up communications as best they can, maybe through Facebook groups or maybe however they're doing it. But those that are looking after their staff are going to see a lot more loyalty from their staff, which if they're looking after their staff first, hopefully that will filter through to the guests fairly quickly as well.
Yeah.
One here on other loans and grants and whether they really are enough to save the hospitality business, to save individual hospitality businesses from folding. Again, that's a very, very difficult question to answer because every example is different. What are your thoughts overall on the grants that the government have given? I think the furlough scheme has been universally welcomed and praised and accepted very gratefully. The other loans, Mark, perhaps you've got a comment on that, and then possibly hand over to Bob.
Yes. So I think the challenge is, to be honest, is not now. The challenge is what's to come, because very few operators in hospitality across the board operate with margins that they can cope with occupancy levels or table numbers being at 50% or some of the things that we're hearing coming out of government. So if the furlough scheme is able to be extended to allow continued support, if rent deferments can continue, then possibly it will be enough. But I think the reality will be if a lot of businesses will not come out of this positively unless that support continues, I'm afraid to say.
Okay.
I think rent is a very important thing. Property rentals is a very important thing, and there is growing support for the national timeout momentum, whereby food and beverage outlets have a rental holiday, and the landlords would have a holiday on their loan repayments. I don't know what Barclays' position is on that, but it's gathering momentum.
So I knew this was going to land in my lap sooner or later.
Sorry, Bob.
So that's quite all right. So the question is will the current round of grants and government-backed loans be sufficient to enable businesses to survive COVID? And the simple answer is, I'm afraid I do not know. as Mark said, there are kind of two stages to this. There's getting from where we are now to when the lockdown comes off and when one can recommence trading. And then after that, there's this journey toward cash break even. And how long is it going to take? And how much cash will it consume on that journey? And the answer is, I don't know. I honestly don't know. I wish I did. And I guess it's different for every business. But I think that it will become a profound challenge. My read across, to the extent there is any read across, would be the 1990s recession. Now, as we came out of that recession, I started a 5-year sort of tour of duty, if you will, doing turnaround management for Barclays. And the 90s recession was very deep, very painful, but the recovery was V-shaped.
Yeah.
And businesses which had a positive working capital cycle. In other words, they carry lots of debtors and stock, and therefore, as their revenue grows, they need more and more working capital in order to fund those positions in the balance sheet. They ran out of cash, so they were making loads of profit, but they weren't making any cash, and sadly, they failed. What we've got in this situation is, I somehow suspect it may not be a V-shaped recovery. I think it will be quite a long road back. That's certainly what everything I see, hear, and read. That's what it's telling me. And what you would wish for would be a V-shaped recovery, because then hospitality, which has negative working capital cycle, starts to throw off cash very quickly, and it all comes right. But we've got the opposite here, and so I fear that there will be a lot of businesses find the road back to cash break even long and arduous. And to Mark's point, I think that unfortunately not everyone will make it. It's just as simple as that, and it's as painful as that. It's very, very sad.
It is indeed a desperate situation that we see ourselves in. Whilst you're there in the hot seat, Bob, I've got another question here for you from Gerard Nolan, who asks if the banks are likely to finance or lend on hotel acquisitions. The fear is if they don't, the values are like. Have you got any comment on that?
Yeah, it's interesting. So there are a number of things in the mix here. It's if you're an acquirer of hotels, you know, when is the right time to buy? Our hotels team, we had a virtual meeting with Deloitte a couple of weeks ago, and Deloitte told us that there's a lot of inbound inquiries from people with liquidity who are seeking to acquire hotels. So if you had a hotel and you decided to sell it right now, you know, depending upon what it is and where it is, and so and if it was fundamentally a viable business pre-COVID, you know, you probably get a buyer, but I would hesitate to speculate at what price. And it may well be that investors and people with liquidity will bide their time a little, because if there is a greater amount of distress, so values will come off. And in very simple and rather clinical terms, you know, you get more bang for your buck, perhaps in 6, 9, 18 months time, whatever it might be. As to where values are at this particular point in time, I don't know really. Interestingly, just earlier this morning, we had an email from Russell Kett suggesting that we had a Teams meeting with him so that we could talk about HVS's views on values in the current market. But to the best of my knowledge, I don't believe it's actually been tested yet. So I haven't seen, and I'm not sure if anyone else has seen any assets come to the market at this precise point in time. So it's very difficult to gauge. But either way, you know, this sort of trots off the tongue, doesn't it? You know, an asset is worth what someone's willing to pay for it at a particular point in time. And I've no idea where that lies. What I can tell you is in the most recent economic downturn that we've had, which would have been the financial crisis, the delta, the movement from peak to trough in regional hotel values in the UK was about 40%. In London, I don't think it moved. London proved to be far more resilient. But in regional UK, it was that wide, as opposed to particularly in London hotels in the 1990s recession, the delta was about 50% in London hotels. Would banks be willing to finance the purchase of a hotel? My answer to that is, well, let's sit down and talk about a particular proposal, and we'll do our best. But that comes with a rider, which is it's borrowing money or lending money for that matter is not about loan to value, and it should never have been about loan to value. What this current situation forces us to relearn is it's all about cash flow, and it only ever was about cash flow, and the value of an operational hotel asset is a multiple of its cash flow. So if you for argument's sake came to talk to me or any of my colleagues about funding a hotel, even pre-COVID, certainly during or post-COVID, and the discussion starts around loan to value, I want to stop you very quickly and say, can we talk about cash flow? And therein lies the fundamental challenge, because we're talking about something over which we have zero visibility at this particular point in time. So acquiring hotel assets, to be fair, at this particular point in time is probably rather more of an equity play than anything else.
Okay, thanks. Very comprehensive question and answer there, Bob. I've just got a very quick one for you, and we're coming towards the end of our time, so I need a quick answer. But it's from Simon Husbeth, who says, what does COVID-19 do to hotel values where ground leases have been put in place?
I'll answer that. The answer is I don't know. Honestly, don't know. And I don't know that the valuers know either. And much depends upon the stance of the freeholder, clearly. I think the financing or the finance community's approach to ground leases has been varied. A lot of lenders, this is all pre-COVID, a lot of lenders would not go anywhere near a ground leased hotel asset because there are some fundamental issues with it. Ground leases are financial engineering by another name. It's debt by another name, and it ranks super senior, to any lender's position. Also, you have a rental burden that increases inexorably year on year on year. And if you kind of plot it graphically and you think of it in terms of the hotel cycle, there will come a point in time in the cycle, COVID aside, when you have a cyclical downturn occurs at a time when the rent has risen to a level that is no longer sustainable and the rent cannot be paid. And then you run the risk, either as an equity investor or as a lender, that the freeholder says, thanks very much, I'll have the keys back. And then your equity interest evaporates and the lender loses all of their money. And as a consequence of that, I think it's likely that even pre-COVID, the buyer pool and therefore the multiples to be paid on ground lease hotels, so the buyer pool is shallower and the multiples of NOI that would be paid would be lower. But quite what the value of those assets is right now, I can't tell you. I've no idea.
That's brilliant, Bob. Thank you very much. We're very much close to the end of our time now. So I just need to say to those listening that the advice we've given you today is obviously on the best knowledge that we can. But should you want formal advice, then you need to contact your own accountant, bank manager, whoever it may be. We're just giving the best of our opinions here today. I want to say a very big thank you to all of my very knowledgeable panelists. So that's Bob from Barclays, David from his asset management company, David from Jumeirah, Mark from BDO on behalf of Stuart, Chris, our chairman, and Diana, our treasurer, all very supportive for me on a personal level, but also I think full of wise words for the wider community as well. Thank you all for listening very much for your time today. On the HOSPA website, we have got a crisis support page where for the hoteliers there amongst you listening, there are offers from all sorts of suppliers and our sponsors to help you through this period. We've put things on there that are either completely free of charge to help you through or significantly reduced to see you through some difficulties in the short term. And we've also got a page on positive news where we're just applauding those hotels that have done amazing things. So that's it pretty much from us. Do tune in again next week, same time. We look forward to speaking to you then. And please do get back to me personally with any comments if you'd like to.